Hi, I'm Andy and welcome to my channel about crypto. If you like this channel, please remember to hit the like button, subscribe to the channel, and also please check out the community tab, where I put polls and questions which allow me to tailor the content better for my viewers. So in this video, I wanted to talk about the current market situation and also what we can expect in a slightly longer time frame in the next few weeks and, well, later this year, in the next few months and so on. If you've been tracking the price of Bitcoin over the last few weeks and months, well, it's quite clear that we are in a downtrend. These are daily candles, and of course we've been going down, well, pretty much since early November, and for the last month or so we've been in this reaccumulation phase, although we did have this breakout here, which actually is overall a good sign because this downtrend was broken. If we look at weekly candles, well, the situation is quite similar. We had a downtrend and then now we are in a sideways movement reaccumulation phase. So first thing to note is that, well, we are still below the 20-week moving average, so we are below our bull market support band. Good news is that this bull market support band is no longer going up. I think it's, or if it is going up, it's going up very, very slowly. And in fact, I think it's stabilized around just under $53,000. And of course, soon it will start coming down because that's our moving average over the last 20 weeks. So as the prices started going down, this moving average will also start coming down eventually. In order for the bull market to resume, we need to break out above it. But there are some other important indicators we need to look at. And the first one is something that probably will start being discussed quite soon by a lot of influencers, and that's the upcoming death cross. Death cross occurs when 50-day moving average goes below 200-day moving average. Or in other words, short-term average price go below slightly longer-term average price. It's a lagging indicator, as in it doesn't tell us anything new, it just essentially tells us what we already know, that we are in bearish phase of the market. But because it's seen as a bearish indicator, well, there's usually quite a lot of fuss made about it because it sort of confirms that we are in bear market phase or simply just reaccumulation phase. So I'll just clean up the chart a bit. So basically the death cross will occur when this blue line will cross below this green line here. And as you can see, they are on converging trajectories and we can expect them to cross somewhere in mid-January, around the 15th of January or so, if the prices continue as they currently are. There is a good chance that there will be a lot of quite dramatic videos or articles coming out, death cross upcoming and so on. But in reality, it doesn't mean anything. Like I said, it's a lagging indicator, it just confirms what we can already see. You don't need the death cross to occur to notice that, well, the price of Bitcoin is going down, right? We had death cross last time in the summer. So it happened right here in sort of mid-ish June, but price of Bitcoin started going down in early mid-May. So that was good month and a half afterwards. And of course, no one needed death cross to confirm that, yeah, we are in bearish phase of the market. I mean, this drop was from like 65k to about 35k when the death cross has occurred. So, like I said, it doesn't really change anything. It doesn't really give us any new information. It just confirms that, yeah, short-term price is below the slightly longer-term price. So essentially, it's just a long way of saying that, well, if you start seeing information about the death cross upcoming and you're not entirely sure what it is, well, yeah, that's all there is to it. And like I said, it doesn't really change anything. It just confirms the current trend. And the death cross definitely doesn't mean that the market cycle overall is over and we are now entering prolonged bear market phase. Like I said, we had death cross in the summer in mid-June, and this didn't stop us from putting new all-time highs in November. So even if we do have death cross in the next couple of weeks, well, it doesn't mean that Bitcoin cannot hit new all-time high in March or April. So basically, I wouldn't worry about it too much, but just be aware that it is upcoming. It's most likely to happen in about 2 weeks time, assuming that the price of Bitcoin remains relatively steady. But yeah, that's all there is to it. Other than that, there are a few other interesting indicators I wanted to point out. So first of all, well, where we are overall in the market cycle. So clearly we had this big drop. We are in a reaccumulation phase, and my expectation is that this will be very similar to what we experienced in the summer. So we had a big drop and then reaccumulation phase. If we put our bull market support band back on, what I think is quite bullish sign is that, well, first of all, this reaccumulation phase is at much higher level than the one in the summer. In the summer we were around 35k, now we are in high 40s, close to 50k. And also we are relatively close to the bull market support band, while in the summer we dipped quite a bit below it. So I think that's a good sign. I think that this may indicate that this reaccumulation phase will be much shorter than the one we had in the summer. The one in the summer was around 3 months. The current one so far, it's been around a month or so. And to be honest, I don't think Bitcoin will put new all-time high within the next month or two, but it doesn't mean that it cannot change back to the uptrend during that time. I just don't expect Bitcoin to go above 69 or 70k within the next 4 to 8 weeks. However, I most definitely expect that at some point in those next 4 or definitely 8 weeks, it will start going up. It will hopefully break above the bull market support band. It will establish it as support, same way it did here. And then from that point onward, well, we know that the next leg of the bull market is on. We then can expect something like this to happen again. So that's the good news, that's the bullish scenario. What would be bad news? What we don't want to see? Well, I would potentially start getting worried if Bitcoin breaks below around 41k level. And that's because we held it as support here. That was, if we look at closes, that was just over 40k, between 40 and 41k. Now, just to clarify, I would be worried if we break below that and have a close, daily close below that level. A week below that level is something that may happen. Stuff like that happens all the time. It may happen just on certain exchanges. I don't care about weeks. But a daily close below 41k would be somewhat concerning. Partially because if we look at the history of Bitcoin, whenever we held certain price as a support on the bull market support band, so in this case it was around 41k, the price of Bitcoin, we never had a daily close below that level. So we may get a wick, but even if prices dip quite a bit, as you can see, they don't go quite as low as they were here. So if you break below it, that would be definitely quite bearish signal. Another thing that's worth looking at is if we switch to the logarithmic scale and put Bitcoin fair value on and zoom out. Okay, so basically whenever price of Bitcoin went below its fair value band, as we saw it here, again here, here, and here, we entered some sort of a prolonged bear market phase. However, if we manage to hold it as support, as we did here, even if it is the very bottom of that band, but still holding it as support, it indicates that the bull market is still on. And as you can see here, actually we then had this massive parabolic move up. So far in this market cycle, we bounced off it here in the summer, and so far we are still quite a fair bit above it. And the current values, of course, those prices keep going up, but at this point in time, this band is anything between, well, let's call it 39,000 and I think around 26,000. So if we break below 26,000 today, or well, going forward, it will be slightly higher, but sort of 26 to 30k range. If we break below it, that would be an indication that, well, almost guaranteed that we'll have a prolonged bear market. Of course, the issue with that is that it's, again, somewhat a lagging indicator. It only tells us, okay, it already happened. We are entering this phase, probably too late to take your profits out. But until we get to that point, so essentially until we break below 26k, I wouldn't be worried about the end of this bull market overall as a longer cycle. So I think we are still in a really good position. If we look at the logarithmic regression bands, as you can see, we have to, well, we don't have to, but it's extremely unlikely that the market cycle will finish before we are well into that red territory here. And we did barely touch this band in the spring last year, and currently we are nowhere near it because those prices keep going up. Even though the prices in November were higher than they were in the spring, we're actually well below that band. And just to put it into perspective, currently the very bottom of this band is around 81,000 and the top is around 120. So until we reach those prices, until we reach this band, I think the bull market is still on. So if we look at the market cycle overall, if we look at the whole of 2022, well, I think everything is still looking good. We are still getting a lot of bullish indicators for mid to long term. However, short term, well, I expect Bitcoin to continue going sideways or possibly even dipping a bit more in the next 4 to 8 weeks. And only then we can potentially start seeing a bit of a move up. So of course, when something like this happens, well, the question is, what's the best investing strategy? What's the best trading strategy? At the moment, the crypto fear and greed index is still firmly in the fear territory. It's been there for quite a while. So that indicates that it's still a good opportunity to buy. And you have essentially two options. If you want to play it safe, I would say that it's a good time to just accumulate more Bitcoin, potentially ETH, or potentially any other top 20 altcoin. Of course, if Bitcoin goes down, it tends to take the whole market with it, and alts tend to suffer more than Bitcoin itself. So just be aware that if you are looking at any of those top 20 alts, they may get hit a bit more if Bitcoin comes down, but it is a reasonably safe strategy. However, if you have slightly higher tolerance to risk, and essentially you are interested in higher gains, and you are willing to accept that higher risk, well, there are a couple of good degen options you can go for, either NFTs or low cap altcoins. If we look at NFTs, the volume on OpenSea actually yesterday broke all-time high. And overall, December was really good for NFTs. We had more active traders than ever before. And January, even though we are only a couple of days in, is already looking really, really good. So there is a lot of volume in NFTs. And in fact, if you can see it, I mean, I sold a couple of projects yesterday which been doing nothing for a couple of months, and then suddenly the prices just started skyrocketing. I made a video about NFTs, I think 4 days ago. I mentioned apocalyptic apes, which you could quite easily get whitelisted for those in December when I first mentioned it. But then when I talked about it 4 days ago, the price was around 0.5 ETH, and now it's around 1.4, 1.5. So easy 3x hit here. And I also talked about the Dodge Pound, which I said it's, if you're after a relatively safe blue chip NFT, really well established NFT project with a great brand, Dodge Pound was the one to go for. And the price was bouncing around 1.5, 1.7 ETH 4 days ago. Right now it's 2.4. So you can see that while Bitcoin done pretty much nothing, and most of other top 20 coins been just bouncing in the relatively small couple percent range, you can potentially make somewhere between 50% and 300% on NFTs quite easily. So, of course, NFTs are far less liquid than cryptocurrencies. And if you're not familiar with them, then it can be a bit daunting to try to get into them as well. But there are some great opportunities there. And if we look at Bitcoin's chart again, during this quiet phase in the summer, that's when NFTs really started booming, especially towards the end of it. I mean, August was great for NFTs, but it all started happening in sort of late spring, early summer. And I would speculate that as long as Bitcoin stays below its bull market support band, so it stays below that 53 or so K level, and there is no massive dump, so it continues sort of doing what it did here, I think there's pretty good chance that NFTs will start pumping again, the same way they did in the summer. We're certainly seeing it right now. Like I said, yesterday was absolutely crazy. In the last couple of days, there's been definitely more and more volume in NFTs. I think it's a bit too early to say that this is a longer trend, but I certainly think that there is a good possibility that this may indeed be the trend for the next few weeks until Bitcoin starts properly going up again. If you are not interested in investing in NFTs, then your other option would be investing in small cap altcoins. Of course, this involves much higher degree of risk than Bitcoin and many other large cap coins, because if Bitcoin does go down again, those alts get hit really, really hard. These are projects I mentioned in my last video, I think 3 days ago. And most of them haven't really done much as expected. I don't really expect it to be very short-term gain. But Ethereum, that's been up around 40–50% since I mentioned it. Wonder Hero's been doing quite well as well. The one I didn't mention, but I talked about it before many times, CD5 fund, that's doing really well over the last few days. But more importantly, all those prices are really good entry points for the next bull run. So if you are willing to risk it, well, now is the time to be accumulating those coins in preparation for the time when the Bitcoin will start going up and all of those will start properly skyrocketing. So like I said earlier, it's a much more risky strategy than investing in Bitcoin itself. But, well, let's be honest, Bitcoin can go up 3 to 4x from the current price in the whole market cycle. It's unlikely that it will go above 200K unless we extend into 2023. 150K to 200K is probably the most likely range for the peak of market cycle for Bitcoin. While for many of those alts, like I said in my previous video, doing about 3 to 4, 5x would only take them to their previous all-time highs. And of course, as Bitcoin goes up higher and the market overall goes up higher, and also crypto gaming gets more and more popular, all of those could go much, much higher than that. A lot of them will probably quite easily do 10x, 20x and more. So what I'm trying to say is that there are plenty of options. You can either play it safe with Bitcoin or go into NFTs and smaller cap altcoins if you are willing to take the risk. I always say that the best strategy is to have a diversified portfolio where you have a bit of everything. Then you can take advantage of all those situations. But of course, you have to do whatever is right for you and your own risk tolerance. So I hope you found this video interesting. If you did, please hit the like button, subscribe to the channel, and I'll see you next time. Thank you for watching. Bye.